What do you make of all of the departures, Tim? I mean, we'll talk about the numbers in just one minute, because there have been departures. I mean, we get these headlines, it's almost like if it's a Tuesday, somebody's leaving, and yet it doesn't seem to affect this. I mean, the stocks moved around a lot, maybe in the same kind of volatility, but not in a way where people go, okay, there's a problem here.
Well, you go back to the beginning of the company 16 years ago, there's been a lot of churn in the executive ranks, especially when Elon Musk took over as CEO. So investors are kind of trained to expect some of this. And you look at the Fremont factory, and, this is a challenge. You have so much churn because making cars is hard, and you need to be doing it on a consistent basis. So you see the churn there, and a long-time auto people get a little nervous. But here in the Valley, it's just kind of the same old for Tesla. Okay,
run some numbers for us this morning. What do you expect in terms of deliveries? But then I want you to run the cash burn on the company, because there are some payments that are going to come up towards the end of this year, early next. There's the China factory. There's a lot of money that's going to have to go out the door.
Yeah, absolutely. I think the Wall Street number, the whisper number, is in the 90,000 range. That would be the low end of the forecast from the company. The challenge here, as you point out, is that cash burn. Even if they hit that number, that's going to help cash burn, but the margins are going to be hit. You've got huge expenses and a huge wish list from Elon Musk. You've got a factory they're building in China. He wants to build a factory in Europe. And there's also this fact that they've got to increase the number of superchargers around the country, and they're facing challenges with servicing these vehicles and getting customers in to take care of problems that they have with these vehicles. So a lot of that costs a lot of money.
And in terms of that money, is there an expectation that there's going to be an additional money raise? Is that what's happening here?
Well, Elon Musk doesn't like to raise money, right? I mean, that was one of the issues for the past year, was his reluctance in saying, hey, I don't need to raise it, even though Wall Street was looking at the numbers and saying, hey, you're getting real close here, man. And you go back to the second half of last year, and there was this huge enthusiasm once he started posting quarterly profits on a consecutive basis. And he was talking about 2019 being just a blockbuster year, profits and positive cash flow going forward. And really, that's what, socked investors in the nose in the first quarter, with really much lower than expected sales, really raising this question of, is there the demand for this vehicle that investors have thought for the last 2 years or so.
Hey, real quick, Phil, I don't know if you're still with us. You with us, Phil? Phil may be gone. Real quick, Tim, do you think
do
you think that if he goes out to the market for additional money, given some of these costs and money that's going to have to go out the door later this year, that he can do it? Meaning, is there enough pent-up demand, maybe not on the sales side, but on the investor side, to still support all of this?
I still think that there is. I don't think that we're to the point where people are like, oh, God, this is a bottomless pit. We're just going to keep throwing money after money after money. I still think that there's enough support there, at least on the financial side, for bankers, investors to say, sure, we continue to believe in this Tesla story.